Hello and welcome to an FXTimes daily market recap. I'm your CMS Forex market analyst, Nick Nassad. Today is Monday, January 25th, 2010. Taking a look at the euro-dollar pair, the dollar slipped slightly against the euro, but stayed within a very tight range in today's trading, as traders were reluctant to take big positions ahead of a week flooded with some large economic data releases and key interest rate decisions, especially the US FOMC meeting. Taking a look at the dollar-yen pair, the dollar managed to gain against the yen, but similar to the euro-dollar pair, we stuck within a very tight range in today's trading, with this range encompassing about 40 pips. The dollar managed to shake off a weak U.S. existing home sales release. Hurting the yen are expectations that the Bank of Japan will introduce some further monetary stimulus into its credit markets in a bid to fight deflation, which has been persistent in the Japanese economy. The bank will meet in Tuesday's Asian session. Before we look at more market movements, let's take a look at the U.S. existing home sales release. For the month of December, existing home sales plunged almost 17% from November's annual pace of 6.54 million to December now at 5.45 million. So that figure undershot forecasts, and as we can see, it follows 3 months of increasing gains. Those gains were a result of a fat government tax credit for first-time homebuyers, which was set to expire at the end of November. However, the government did expand that program into June, so we'll see if that helps to boost existing home sales as we begin 2010. In a release from Germany, we had the GfK consumer confidence for the month of February dip slightly to 3.2 from January's 3.4. Economic expectations are recording stable development, with the propensity to buy increasing slightly. However, income expectations recorded some losses, bringing the index down. While we didn't have much in the way of UK releases today, the pound was a strong performer, gaining on the dollar, the pound, and the yen. It managed to reverse some of its steep losses in Friday, following a weaker than expected UK retail sales report. So here in the dollar-pound pair, we slid down below the 1.61 area in Friday's trading, but then the 1.61 area acted as support, and we moved higher, testing 1.6240. That level acted as support in the middle of last week's trading, as well as in 2 weeks ago here. So this is an important level that acts as a power line, and it had switched its role now from support to resistance, and we'll see how that develops in the next global trading session, whether we bounce down from that resistance or if we break it and extend gains from today. Taking a quick look at the euro pound, we see that we had been in a downtrend in this pair for about 2 weeks. That was uplifted in Thursday's and Friday's session, but following our test of 0.88 overnight, the pound regained its strength and managed to trade down to the 0.87 level. We'll see if this move means that we are going to continue this bout of pound strength, or if perhaps now we, following a test of support, begin to trade more sideways. Overnight, we're going to have an important UK release in that we have the advanced version of GDP growth for the fourth quarter, and the UK has not technically exited its recession yet, as third quarter growth was negative, so we'll see. Expectations are for a positive 0.4 print for the growth in fourth quarter, and we'll see if we meet those expectations or if we have a better than expected or weaker than expected release. So that could have an impact on where the pound goes next. In the Monday Asian session, we did see Australia release its producer prices for the fourth quarter, which came in weaker than expected, as we had prices down 0.4% when expectations had called for a slight increase. On the year, producer prices were down 1.5%. We can see on our chart to the right that 3 out of the last 4 quarters have seen producer prices in negative territory in quarterly change. The reason for this weaker than expected number was a strong Australian dollar, which made imported goods cheaper. Still, we have Wednesday. Australia will be posting its consumer inflation data, and since producer prices usually filter into consumer inflation several quarters in the future, traders are not expecting it to move the consumer inflation data on Tuesday. If consumer inflation is high, it will affirm the interest rate increases we had seen by the Reserve Bank of Australia and the fact that it may be planning to further raise its benchmark interest rate in its meeting next week. From our look at the Aussie dollar pair, we see that the producer price data didn't really affect the markets much as the Australian dollar managed to gain in the wake of the weaker than expected release. We hit a high around 0.9089 in the pair, and then the Aussie gave up those overnight gains in US trading. Last week, for the most part, we had greenback strength as we had an increase in risk aversion, but we did find support at the 0.90 area in late Thursday and Friday trading. So we'll see if we test that level again in the upcoming sessions this week. We did establish a new short-term level of support here at the 0.90 level, which was our high from Friday and now again from Monday. So we'll see if perhaps we are going to see some sideways action, though again the consumer price data that we see in Wednesday's Asian session may have an impact on where the Aussie goes from here. Now let's take a look at some upcoming fundamental indicators in our upcoming trading session. Tonight, Japan posts a measure of inflation in its corporate service price index, which will be followed by the Bank of Japan interest rate decision. Again, here it's important to see whether the Bank of Japan will extend its emergency lending, either the amount or a duration, as it continues to purchase Japanese government bonds. Overnight, we get Switzerland releases its UBS consumption indicator, Germany posts a measure of import prices, while the Eurozone releases its current account. However, the two important releases to keep an eye out will be the Germany IFO Business Climate Index and the advanced fourth quarter GDP from the UK. Tomorrow from the US, we get two measures of housing prices, the Standard & Poor Case-Shiller 20 City House Price Index, as well as the government FHFA House Price Index. One is a measure of the major metropolitan areas in the US, while the other is a broader measure of all national housing prices. Also on tap tomorrow will be the Richmond Fed Manufacturing Index, as well as a measure of consumer confidence from the Conference Board. Traders, however, will be looking ahead to further later in the week when we get on Wednesday the FOMC interest rate decision and statement, as well as on Friday when the US will post its fourth quarter GDP figures, its preliminary version of fourth quarter figures. So that will wrap up today's daily market recap. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching today's broadcast and wish you good trading.